Drawings. You are already familiar with this term, drawings. Drawing means when the money is withdrawn from the business by the owner for personal use. I mean to say, to meet his personal expenses. Naturally, anyone who is doing business and he earns profit from the firm, naturally he will withdraw it to meet his own personal expenses. Be careful. There is difference between drawings and capital withdrawal. Drawing means to withdraw money from the business to meet personal expenses, or to withdraw the profits, or to withdraw money in the anticipation of profits. That's called drawings. But if the money is withdrawn from the business with the intention to reduce the capital, if the partner feels or the owner feels that there is too much capital in the business and he wants to reduce it and he withdraws money, that is called capital withdrawal. So let's come back to the drawings. If there is agreement in the firm among the partners that if any partner withdraws money for personal use, he will have to pay interest. And that interest will be called interest on drawings. Naturally, interest on drawings will be received by the firm and will be paid by the partner. So it will be income for the firm but expenditure for the partner. But we are doing accounting from the point of view of the firm. So interest on drawing is an income for the firm. Now the thing is how to calculate interest on drawings. You are well aware that all interest are calculated normally on annual basis. I mean to say per annum. Suppose in a question, a partner withdraw 24,000 rupees from the firm and interest on drawing is charged at the rate of 10% per annum. So it's a very simple thing. 10% of the 24,000 rupees. It means 24,000 into 10 upon 100, that will be 2,400 rupees. It's a very common thing. But upon 100, that will be 2,400 rupees. It's a very common thing. But you know, interest is always paid for the use of money. And it depends how long the money has been used. In this question, I assume that the closing of the year is 31st December 2010. I am to say the closing of the books of the firm is 31st December 2010. And he withdrew rupees 24,000 rupees. And we have calculated the interest for the whole year. It means he withdrew money in the beginning and he used the money for the whole year. But if in the question it is given that the books are closed on 31st December 2010 and during the year A withdrew rupees 24,000 rupees as drawing. Now the problem is we don't know at what time the money was withdrawn. If it was withdrawn in the beginning, then we'll calculate the interest for the whole year because he has used the money of the firm for the whole year. If he has withdrawn this money at the end of the year, then the interest on drawings will be nil because he couldn't use the money during this year. He withdrew this money at the end of the year, means as on 31st December 2010. But if the question is silent, we assume that the money was withdrawn in the middle of the year. So we will calculate the interest on drawings for 6 months. So the interest on drawings will be 24,000 upon 100, that will be 2,400 rupees. It's a very common thing. But you know, interest is always paid for the use of money. And it depends how long the money has been used. In this question, I assume that the closing of the year is 31st December 2010. I am to say the closing of the books of the firm is 31st December 2010. And he withdrew rupees 24,000 rupees. and we have calculated the interest for the whole year. It means he withdrew money in the beginning and he used the money for the whole year. But if in the question it is given that the books are closed on 31st December 2010 and during the year A withdrew rupees 24,000 rupees as drawing. Now the problem is we don't know at what time the money was withdrawn. If it was withdrawn in the beginning, then we'll calculate the interest for the whole year because the money of the firm for 12 months, because 1st January 2010 to 31st December 2010, this block is for 12 months. Naturally, he will have to pay interest for 12 months. If it is clearly stated in the question that A withdrew rupees 24,000 as drawings as on 1st May 2010, I mean to say 1/5/2010. In that situation, we will have to calculate the interest on drawings only for 8 months because the 4 months of the year have already passed. For the remaining 8 months, he has used the money. In every question, I am assuming that the books are closed on 31st December 2010. So in this situation, the interest on drawings will be calculated only for 8 months. One thing more, I would like to explain you that interest on drawing is income for the firm. You already know. So naturally it should be shown always on the credit side of profit and loss appropriation account. I'll explain you later what is the meaning of profit and loss appropriation account. For the time being, you can assume that it is always shown on the credit side of profit and loss account because this is the income for the firm. One thing more, if there is agreement among the partners in the firm that if any partner withdraws money from the firm will charge interest on drawing. Only in that situation, the firm can recover interest on drawings. If the agreement is silent regarding interest on drawings, in that situation, firm cannot recover interest on drawing as per law. Interest on drawing is an income for the firm. So, the firm will recover this interest on drawing from the partner. So, it's a debit item of the capital account. I mean to say, interest on drawing always reduce the balance of the capital. That's why it is always shown on the debit side of the capital of the partner account.